Brenda. In fact, our next guest has been dipping her toe into value, cyclical, recovery stocks as well. Sarah DerGarabedian is Parsec Financial's Director of Investment Management, back with us today. Good to see you again.
Nice to see you, Scott. Thanks for having me back.
Yeah, I mean, we had this conversation, at least we lead it into it the last time you were here. You said you were selling tech a little bit, at least taking some off the table and putting it into areas like the financials.
Right, I know, which is kind of an unpopular topic to broach, but that is in fact what we're doing. We do that all the time though. I mean, we maintain exposure to a lot of different sectors at all times. So yeah, we have been trimming some of the tech names because they've just gotten so huge, you know, and rotating that into other names. And so of course that's going to be places like financials, but it could also be any of the other sectors. You know, sometimes it's discretionary, sometimes it's industrials, you know, even maybe energy, hate to say it. But yeah, I mean, I think that everything that Brenda was saying is absolutely spot on. This is a great time. You know, some of the other guys have said it too. I think we're going to see lots of volatility going forward in the next couple of months. And so if you've got cash on the sidelines, you know, you don't want to wait until all of these things are resolved and the markets pop back up again. You want to start dripping that in over time. And yeah, I would say, you know, I would still be, you know, in some of the growth names, but I would also be in some of these other value cyclical names.
Well, what makes you think, though, that there's staying power to some of those names? You know, it's been such a short-lived run. Any time that they've picked up in terms of the value names, the cyclicals, the industrials. I can't even believe that you said the E word, energy.
I know. I know. I love to throw that out and just shake things up a little bit. Yeah, I mean, so taking energy just as an example, that one's been terrible, clearly. You know, it's cyclically depressed. It's in a secular downturn, we think. And we have a lot of conversations in our own research committee about something like energy. Do we have direct exposure to it or not? So we get some trace exposure through ETFs and funds, and so we don't have a lot of direct exposure through individual companies, but we still may have one name that we are, you know, investing in the energy sector. And I think that you have to be ready when, you know, markets take off, they take off quickly. It's hard to know when they're going to turn. And what it makes me think of, Scott, is when my tennis coach tells me that, you know, when you're on the other side of the court, you're waiting for the ball to come to you. You don't know where that ball is going to come. So you have to kind of be bouncing around, you know, kind of on your toes, ready to move in any direction to get that ball. And it's kind of the same with value and growth. We don't know when that value is going to be, and if it's going to be, you know, some long-term thing. When's it going to happen? We don't know. We want to be ready for it when it does happen.
Yeah. Are you able to, you said one name in energy. Are you able to tell us which one? I can't remember if you can talk about individual stocks or not.
Yes, I can tell you that we recently just upgraded Kinder Morgan. So we had been putting money into Total. Among all the integrateds, it was the one that we felt was the best. But clearly, recent results have been terrible. And so we were looking for something a little bit different, not up or downstream company, but we like Kinder Morgan because it's in the midstream sector. So that's, you know, pipeline company, and they're really more reliant on volumes and not so much the price of oil and gas, which, you know, is a better place to be. They have a huge natural gas footprint in North America, and we think that that demand for natural gas is probably going to increase over the next decade as it sort of bridges the gap between coal and cleaner, more renewable energy. So, you know, Kinder is a very financially strong company. They've been paying down debt. They've been lowering their interest expense, reducing CapEx by 30%. They've got a new pipeline coming on in 2021. So all of these things are going to boost their cash flow and probably support that dividend. They've got like a 7 to 8% dividend yield and possibly even lead to some share buybacks. So right now, just prefer that midstream exposure to either the exploration, production, integrated, refining.
Music to Pete Najarian's ears. Right, Pete?
Yes.
Are you still in KMI?
Absolutely.
Kinder Morgan?
I absolutely am, Scott. Yeah, there's no reason to ever get out of this thing, at least in the near term, that I can see, Scott, because
I don't know,
you know,
except for that little number over there on the right-hand side of that chart that we were just showing that said it was down 39% over the last year. So I don't know of any other reasons to maybe get out of it, Pete, but maybe that would be one.
Well, I still think, Scott, I think that the story is still in place. And as she was just mentioning, I mean, a midstream story, they've cut back on CapEx. Their financial position is great. When they needed to, they cut back on the dividend significantly. Then they were able to put it back in as cash flow started to come in. So I think that there's a lot to this, Scott. Matter of fact, in the very short term, we've seen this stock get over 20. We've seen it walk all the way back towards the 12. So yeah, it's been volatile along with energy, and it will be. But to her point, I think that when you really look at this company, there's a lot of reasons that you'd still want to own it. And by the way, Richard Kinder just continues to be the guy who continues to buy his own stock back. So he believes in it. I believe in it. Right now, obviously, it's been beaten up to your point when you say down 39%, no doubt about it. But this is a stock that I've held for a very long period of time, and I have no plans, at least right now, no plans at selling at all.
Moving higher as we speak. Highs of the day for KMI. It's up nearly 1%. Now, Steve, maybe Sarah is just trying to get ahead of the curve, go where the puck is going to, right? The old Gretzky thing. And maybe that's a good strategy with the value plays. If you think that Biden's going to win the election, there's going to be massive spend, don't you think? Infrastructure, stimulus, or whatever it is, especially if there's a blue wave and the Dems get the Senate too, maybe just trying to get ahead of that. Is it smart to do that now?